the best of Money Matters.
Market View on Money FM 89.3.
You're listening to Money FM 89.3, and it's now time for Market View. I'm Nadiah Koh. The STI started the day in the green, up 0.13%. It maintained that positive momentum by ending the day high in the green, up 1.1% at 4,472 points, where gainers outnumbered losers 275 to 162 after about 1.2 billion securities worth 1.6 billion Singapore dollars changed hands. Elsewhere, global investors continued to pile into tech stocks, the driving force behind this year's market rally that has pushed several indexes to record highs. That momentum was fueled by news that Advanced Micro Devices, or AMD, and OpenAI have struck a partnership to develop AI data centers. At the same time, OpenAI made waves with its own announcement unveiling a new feature built in collaboration with various partner firms. Even brief mentions of this companies during its annual developer event has sent shares soaring. So let's unpack all these developments with Thilan Wickramasinghe, Head of Equity Research at Maybank Securities. Hi Thilan, welcome to the show. So all right, how did the STI fare today? What moved markets?
The STI was up about 1.1%. We actually saw pretty broad-based support for the STI today. We had the banks, industrials, consumer, tech manufacturing, all helping to push up the STI into the green.
All right. So who were the biggest movers today? Any surprises that caught your attention?
We saw names like the industrials, particularly Yansitiang Shipbuilding, Sembcorp, Keppel, all gaining today, and I think largely from rotation from the very oversold levels that they were at. We saw Singapore Airlines, they also gained after they expanded their JV with Lufthansa to include Brussels Airlines, and also likely from some of the afterglow from Formula One, which saw record participation. DBS was a big gainer, as well as UOB ended in the green as well. On the loser side, we saw Wilmar, which was in the red, with continuing legal uncertainty in their operations in Indonesia. We saw some of the property names and the REIT names, such as MLT, FCT, CityDev, also coming in a bit weak with rate cut uncertainty likely coming from the U.S. government shutdown.
Right. So, Thilan, shares of DBS Bank climbed as much as 2.3% this morning, driving its market capitalization beyond 150 billion Singapore dollars. So, to what extent is this driven by optimism surrounding further U.S. Federal Reserve rate cuts?
I don't think it's really driven by the rate cut. In reality, the U.S. government shutdown, given where it is today, whether the Fed will actually get the data they need to cut rates is actually a big question. I think why DBS is moving is the same reason why other safe haven assets like gold is moving. Singapore is one of the few AAA credit-rated countries left, and DBS represents one of the most liquid and large-cap stocks in Singapore with some government linkage. So I think that's rotating some of the flows. Plus, fundamentally, though, you also have some positives for DBS as well. Capital return for the group is very, very clear until 2027. With their dividends and share buyback policies very much in place, and that's actually very attractive in a falling rate environment. Plus, you also got potential for better loan growth, strong wealth management, fee income, all coming through in the third quarter results, which should be out in a couple of weeks' time. So all of that should actually support DBS enjoying these flows.
And still on DBS is now nearly double the market capitalization of its nearest banking rival, OCBC. But why hasn't OCBC and UOB witnessed the same level of new highs as DBS?
I think the differential is twofold. First, DBS has about a 300 basis point advantage when it comes to their ROE than OCBC or UOB. So you can justify a higher valuation for DBS. Second, as I said, DBS enjoys a Singapore Inc. premium, which the other two banks don't as much. Having said that, the valuation gap between DBS and the other two banks on a price-to-book ratio is now the widest we have seen since August. And, you can't discount the fact that the other two banks will also benefit from the fundamental operating conditions that DBS is enjoying, whether it's wealth flows that are coming to Singapore, rising loan demand because Singapore is undergoing a construction boom right now, plus regional capex as well. So we do expect, both of these banks to do some catch up over the near term.
Right, Thilan, staying in Singapore, economists largely expect the MAS to keep policy settings unchanged in October, even as trade headwinds mount and the US threatens fresh sectoral tariffs. So what are you expecting?
We are also expecting the MAS to stay with their modest Sing dollar appreciation policy. Look, Singapore's inflation is cooling when we looked at the latest August numbers, and the economic outlook is not too badly impacted by the trade war. We think overall economic growth will only moderate slightly in the third quarter after a very strong first half, despite all the impacts of the reciprocal tariffs. We are forecasting GDP growth to come in at around 3.2% for 2025, which is actually significantly higher than government estimates. All of this should give MAS enough room to keep their current policy setting for October and also for the rest of the year as well.
Right. And if the MAS keeps its rate steady, how will this impact the STI?
The reality is that despite MAS's policy, Singapore has not really been seeing a slowdown in terms of liquidity coming in. We can very clearly see that from the benchmark SORA rates, which has collapsed, and also deposit growth continues to be very, very strong. So when there's very high liquidity in the system, it is typically good for equities and the STI. Right now, alternative assets like treasury bills hardly give any yield at all. 6-month paper is around 1.4%. And if you actually look at the STI dividend yield, that's about 4.6%. So I think the STI could continue to see positive momentum. And also don't forget that the EQDP or the policy reform money will start to come through in the fourth quarter of this year as well.
So, Thilan, I want to move away from Singapore now. Some news from OpenAI overnight. It unveiled a new feature for ChatGPT, enabling it to interact with everyday apps like Spotify and Booking.com. So, mere mentions of other publicly traded firms that it partnered with has sent shares soaring, including Figma, which climbed 7.4%, HubSpot added 2.6%, and Salesforce gained 2.3%. Online travel companies also saw brief pops. What does this tell us about the power of OpenAI in its ability to move shares?
We are in a momentum market. Anything AI related just moves. This is not just the OpenAI phenomenon. We saw this last year with NVIDIA as well during their GTC conference, where companies, any company that was mentioned by Jensen Huang also saw pops merely by just being associated. So I would be a little bit cautious. Momentum trading in this sort of market is a legitimate strategy as long as investors are aware of the risks as well.
Right. You've mentioned that you should be cautious. So with OpenAI partnering with so many different partners, so like Booking.com, Canva, Coursera, Spotify, Uber, etc., does that mean that all these partnered firms will see their shares pop every time OpenAI makes a new development?
As I said, I think in a momentum market, you can't discount it or ignore it. Of course, in some cases, partnering with OpenAI, remember, they do have ChatGPT, which has 800 million weekly users. It does have benefits. It can open new revenue streams for these partners. It can also enhance the strategic positioning, brand value, tech edge for a lot of these partners as well, which then will drive more investor attention. These are positive factors that can drive stock prices higher. But the question to ask is that really enough or is that going to be material enough to move the revenue needles for these companies? Now, that's, in most cases, that's something that's a bit too soon to tell.
Right. So we've got more news from OpenAI. OpenAI and AMD have struck a multi-year agreement to collaborate on AI data centers that will run on AMD processors. So how has AMD shares fared following this news?
AMD's had an explosive rally with the share price rising about 24% overnight. It's now worth, I think, more than Coca-Cola or General Electric. It can deliver billions of dollars of new revenue for AMD and really put it on the map in terms of a serious AI chip contender, alongside NVIDIA.
So did this news have any impact on Asian AI and chip stocks during today's trading session?
We did see the Asian chip-related stocks also jumping. TSMC is now close to record high, and we also saw some of the Japanese chip makers also seeing pretty similar strong rallies. Even in Singapore, The second, third derivative chip players such as AEM, UMS, Franken, all saw some pretty good momentum today.
Right. Thilan, I want to bring in NVIDIA right now. Will this lead AMD to dent NVIDIA's dominance?
I think the commitment by OpenAI shows that AMD is being taken seriously in the AI infrastructure space. AMD has actually claimed that some of their chips do offer greater efficiencies than NVIDIA chips. But whether it'll be enough to knock NVIDIA off the perch is hard to say. And this is because NVIDIA's AI infrastructure ecosystem is more mature, and a lot of the software stack is actually built around their chips. And they've got a big install base as well. So there is a certain level of inertia in terms of users looking to move. But having said that, how AMD will innovate going forward, I think that's something very interesting to watch.
Right. So looking forward, does this agreement mark a new phase of the AI boom? Does the AI rally have more space to run?
There's a lot of money being made and spent on AI. I think we are very much, in a bubble space when it comes to AI. But I don't think anyone knows for sure whether we are at the beginning of it or near the end. So I think it's very, very important at this stage of the cycle to be very, very clear-eyed in terms of AI use cases, profitability, earnings growth, in terms of and keeping those right in the front seat comes to making investment decisions.
All right, Thilan, before we let you go, anything else you'll be watching in the next few days?
I'm keeping a very close eye on gold, which is closing towards about $4,000. There's the U.S. government shutdown. Japan's got a new prime minister who might go for looser fiscal policies, and we just had the resignation of the French prime minister, all adding to a lot of policy uncertainty right now globally. So that is raising risks, and I think investors will be looking to diversify. I think they will be looking even more closely at gold, even at these high levels.
All right. Some great insights, Thilan. Thank you so much for your time.
Thank you.
That was Thilan Wickramasinghe, Head of Equity Research at Maybank Securities. This has been Market View on Money FM 89.3. I'm Nadiah Koh.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.
Money FM 89.3.